Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for December 11, 2021. Gold is trading last at $17.89, up about $4.20. We have a little bit of a mixed opening this morning. A rather quiet opening. Silver, $22.41, up 21 cents. Bitcoin has been a bit volatile this morning, getting up to a high of about 50,400 early this morning on a big gap opening, and we've come down to fill that gap and are trading down about 600 points to 47,865. Considering the inflation numbers that came out, the markets are pretty much subdued, particularly the precious metals markets here. We have an anomaly building, or it has been building actually since March of last year in precious metals here, that we've entered into a corrective pattern. The fundamentals seem to be extremely bullish as the Feds continue, or the administration continues to promote more stimulus is necessary. Let's just allow for the market to settle down a little bit here. And then we're going to take a look at some of the weekly data for gold, Bitcoin, and silver market if we get a chance to see them all. Let's take a look at the weekly report that we published in Marketplace in Seeking Alpha. And I want to share with you basically this report to give you an idea of how the VCPMI artificial intelligence basically is produced. We're looking at a December 10, 2021 Gold Weekly Report that was published on December the 12th. The weekly trend momentum of 1806 is bearish. And basically, the weekly trend momentum that we use is the 9-week moving average. And the price closing above or below identifies the trend momentum, either bullish or bearish. The trend momentum is the bigger picture, and it gives you the direction of the market from a trending point of view. And with the market closing below 1806, which is the 9-week moving average, we're coming in with a bearish trend momentum sentiment. The weekly VCPMI of 1783 is bullish price momentum. Now, the VCPMI is the variable changing price momentum indicator, or the average price, or the mean. And with the market closing above the mean, or the average price, is indicating a bullish price momentum. So we have a bit of a conflicting signal in that the bigger trend is bearish, but we're getting the momentum, the price momentum, which is the velocity or the momentum within that bigger trend, beginning to be bullish. And it also tells you that if we close below 1783, that it would negate this bullishness to neutral. So if you're following the signals, a close below 1783 would be your stop, and this would negate your position to neutral if you're following the variable changing price momentum indicator. It tells you also that if you're short, as the trend momentum is, that if the price comes down to 1771, 1756, these are levels to cover your short positions in reverse to go long. These are the targets. And following the bullish price momentum, the long signal that we have coming in tells you to take profits at 1795 to 1807. So the algorithm basically gives you the extremes above or below that average price, or that mean, which is identified as the variable changing price momentum indicator. And when you see basically a chart, you can see pretty much the relationship of the weekly numbers that we have, of the average of 1783. And on the left of the chart here, we have the daily numbers, and you can see that the price of 1783, 1782 is harmonically aligned with the daily numbers that we have coming into today. The target for the day is 1793 to 1802. And this kind of fits into the weekly targets that we have for the rest of the week, which are 1795 to 1807. The price is in a bullish price momentum. And unless the price closes above 1806, 1807, we're in a bearish trend momentum. So we have a bullish price momentum within a bearish trend momentum. A little bit of a conflicting signal, but with an upward bias. As you can see, coming back down to 1772 was a harmonic relationship daily and weekly, and the market came down to make a low of 1770, reverted from there, reverted above the average price, meeting the target of buy one daily and weekly, and now setting up for a big move to the upside, basically on the targets above the mean of 1795 to 1807. And you can use the 1783 as your protective level. The silver market, as of December 10, 2021, the weekly trend momentum of 2379 is bearish again. This is the big trend, and we're coming in this week with the price closing below the trend momentum, activating a bearish sentiment. The weekly VCPMI, or the weekly variable changing price momentum indicator, or the mean or the average price of 2222, is a bearish price momentum. Because the market closed below it. But it also tells you that if we close above 2222, stop, which is your protective level for the short signal, it would be negated. And it also tells you that if you're short, to take profits at 2181 to 2141. The low so far today on silver has been 2181.50. So it has covered the short positions and it reverted to go long from there. And it pretty much tells you that look to cover your short positions at 2181 to 2148. So it activated your buy trigger at 2181, and you can use the 2148 as your stop. Initially, the market goes about 2121, you can bring your entry point to or you can bring your stop to your entry point, in this case 2121, so you have no risk on the trade. The target is 2263 to 2384. The daily targets are 2237 for silver, which are currently being met right now. So we're moving into the ideal target that is identified by the price momentum of 2263 for the silver market. Bitcoin, as of December 10, 2021, the weekly trend momentum of 58,246 came in as a bearish sentiment coming into this week. The market closed below there, so it identified that we are in a bearish price momentum. A bearish trend momentum. The weekly VCPMI, which is the variable changing price momentum indicator of 49,100, is also bearish by the market closing below it. But it also tells you where you put your stop if you take the short side, which is a close above 49,100. close above 49,100 negates this bearishness neutral. So this would be your stop level if you short. And it tells you to, if short, to take profits at 46,005 to 44,120. Let's take a look at where we are right now with Bitcoin. As you can see, we're trading below the weekly average and the daily average, and so there are no day trades yet identified, but we have identified the trend momentum is bearish, and it's activating actually the target below of 46,722 to 4,600, which is the weekly target. These levels have been activated. It doesn't guarantee that the prices are going to come down here. This is a prospective mathematical calculation of the extremities, you might say, of speculation in the market. And when we approach these levels here in blue, ideally the algorithm is telling us that we are at the extreme below the mean of standard deviation. The average price is a 50-50 standard deviation. By 1 and by 2 are 90-95% relative to the implied volatility to the mean. So they are at the most highest mathematical probability to revert from these levels. As you can see, we're beginning to see the bars turning green, which is essentially buyers coming into the market. And the market will tell us. The market will tell us where it has found, you might say, the ideal balance of supply and demand. We are using the daily numbers and the weekly numbers here to identify trading opportunities in Bitcoin. So far for the day, there's no trading signals, but we are trading below the average price daily and weekly, and it has activated a target of 46,722 unless it closes above 48,493 or 49,100 using the 15-minute bar, at which point it would negate this bearishness to neutral. When you're trading above the average price into the red zone, it begins to identify the extreme above the mean, or basically the extremes of speculation above the average price. The blue levels are the extremes of speculation, where you find a buy-in or accumulation, or basically support. Markets are very quiet this morning, and I believe they're trying to digest basically the Omicron threat that seems to be still in the marketplace. It's still making a lot of people nervous, and you can see the markets being reflecting or nervous about the volatility that we seem to be experiencing here. It's affecting basically the equity markets here. As you can see, we've activated a short trigger from the weekly level here on the mini S&P. So we have a little bit of nervousness in the market here this morning. It seems a little bit a mixed bag of goods, so to speak, but we continue to expect that the metals here are moving into potentially a seasonal bottom here as we end the end of this year, as well as cryptocurrencies. And we have a lot of volatility, again, as a consequence of all of these rumors going around about Omicron and the danger of infections once again during the wintertime. So far today, we haven't identified any day trading opportunities here as the markets are in a bearish sentiment for the day. We want to see where the buy-in comes in or where the signals are activated. But for now, it looks like we are in a neutral zone for gold, silver, and Bitcoin. There are no day trades. Continue to maintain your core position intact. And again, look for buying corrections into this swing correction that we have once we get the signals activated. But we are in a major area of accumulation for metals, gold, silver, and for Bitcoin. We are offering a 2-week trial to the Discord trading room for basically the live trading that we do for the rest of the day. We trade live here for the courtesy of our viewers in YouTube or other media between 7 and 7:30, but we keep the room alive for the rest of the day where we update and trade and execute signals produced by the variable changing price momentum indicator. Have a great trading day, my friends. Please subscribe, click, and like, and I'll see you soon. You take care.